Good morning, Wall Street winners. It is Wednesday, April the 9th, and the tariff game is starting to show signs of unraveling with these new tariffs, 50%, taking tariffs up to 104% on China. It's so ridiculous that China hasn't even responded. They're basically ignoring the increase because it's just a made-up number. It came out of nowhere other than Donald Trump's butt, and they know that that's not how the world works. So they're ignoring it, and they'll respond in their due time. We saw Delta Airlines come out this morning with its quarterly earnings, and not great. I mean, good news is they were positive, the earnings. They were making money in the last quarter, but they've pulled back their full year guidance, and they are looking at reducing flights and capacity. And I think that's what we're going to see across the entire economy. So this whole idea of putting a tariff or a tax on goods coming into the country and charging Americans more for these goods made internationally so that companies can attempt to make them over time locally at these higher increased prices to be more competitive with the taxed tariff prices. We're going to see it right now through the U.S. consumer, a reduction in spending. So if we see the consumer spending less on goods and services, then there's going to be less tax collected on the goods and services because the whole economy is shrinking, and it's shrinking quickly. Consumers are pulling back and they're spending less. And regardless of where those products come from, even if they if they buy the same number of products from, say, China or Canada or Mexico or some other overseas market as as someone in the U.S., we're still going to see less money get collected from these tariffs to pay down the deficit if that's the ultimate goal. And then to get products made in the U.S., this is something that's going to take at least a year, if not multiple years, depending on the complexity. And in the case of, say, a simple example like the iPhone, to reproduce the manufacturing facilities that have been built out in China, primarily through Foxconn, which is the contractor that Apple uses for the build, it's going to be 3 years, and you're going to bring jobs back, but are they ultimately going to be able to pay the same as in China? I mean, if you look at car manufacturing, they're saying that a union auto worker in Detroit averages $86 US an hour. That seems high, but that was the number that I read. Whereas in Mexico, that hourly rate, maybe that's an all-in rate, but that hourly rate drops to less than $25 an hour. So it's more than 3 times the labor cost in the U.S. So, and then you've got more expensive U.S. dollar, you've got a cheaper Mexican peso, cheaper Canadian dollar. So there's that factor that comes into the trade, and that's going to significantly boost automobile prices. Not to mention, with automobiles, you have a ton of very specific manufacturing companies that make very specific parts in different countries. And to bring that kind of production back will take longer than just a traditional factory. Then you flip over to things like aluminum and steel. And the challenge with aluminum and steel is it takes a significant amount of power. And the U.S. right now doesn't have a significant amount of power in terms of utility power. So they're now forced to, Trump signed an executive order for beautiful, clean coal. I can't imagine how clean and coal are used in the same sentence, but nevertheless, he wants to spin up more coal plants so that he can power these aluminum plants. Well, to build a coal plant, you might be able to use one that already exists that they've shuttered years ago. But if it's not in a condition to be started back up immediately, now you've got to probably spend half a year to a year, maybe longer, making sure that that infrastructure is in place. And then you spin up the coal mines again. It's not a quick process. I mean, nothing in government is fast. This is private business, and private business can move at accelerated pace. But there's only so quickly it can go. And then you add to that the confusion in private business. Why, as an investor or a publicly traded or private business, do we want to put our money on the line to risk our capital when the president shifts gears so quickly and makes decisions and then undoes them that there's no certainty in this market? If he immediately supports coal and companies start investing billions in rebuilding these coal facilities to increase power, but then he decides that coal is no longer going to be supported, or in 4 years, the next administration shuts coal down, then there's no return on investment for those companies. They're going to have lost that investment money. So the whole narrative around these tariffs, now we're hearing out of the administration that pharmaceuticals are going to be tariffed. So that is only going to increase the price of drugs for Americans who already pay the highest price for drugs in the world. Like, people go to Mexico to buy American drugs like Ozempic or many other drugs, but Ozempic being the popular weight loss drug. There's Americans down there on vacation buying drugs in bulk so that they can take them back at great discounts to what they have to pay for them in the US. So we're at a very interesting point where this strategy appears to have major holes. It's like Swiss cheese. It's caused significant financial impact. It's caused significant reputational damage to the US government, not the people. I mean, the world understands that this is a small faction of individuals that are executing on this strategy of Project 2025. And it's not everyone in the US that feels this way and wants to be isolated, but this administration and the isolation tactics that they're implementing have set back international trade and international relationships years right now. We're also seeing that investments that have been made into building relationships with Japan and South Korea to get them to work with the US on trade deals and get them move their dependency away from China, which had been working, have now fallen apart. And they're now going back to China because of the tariffs imposed from the US. So these strategic alliances that the US has invested a great deal of time and energy and effort into are all unraveling before our eyes. And these are things that aren't really seen by the public, but are talked about often behind closed doors, and in some cases on different media outlets, by individuals who have been involved in these discussions and led these negotiations in the past. So I'm not talking about some blogger, even like me, who's opinionated. It's factual from a person who's been involved in conversations. So when we hear that, and we continue to hear more, and we hear that travel is waning, people don't want to travel. International people do not know, they no longer want to travel to the US. They probably don't feel like they're welcome because of the message being sent by the president, but they also don't want to support a country that is creating pain in their own country. So I know, in being in Mexico all winter, a lot of folks there were talking about, who weren't American, were talking about avoiding the US. I know in Canada, coming back for the spring and summer, a lot of Canadians have canceled plans. A lot of Canadians canceled plans over the winter to go to the US. So it's just a strategy that appears to maybe not be as well thought out on its execution as it could have been. And it's a situation where to implement it is going to take a great deal of time. And in order to get there, maybe we have to look at unwinding some of these crazy things. Now, on the positive side to all this, and going back to the markets, the US consumer has been super resilient through this. We have not yet, and I'm fingers crossed when I say this, we've not yet started to see a ton of job losses, and that's a good thing because job losses will create more uncertainty, and that will definitely force the US into a recession. So I think there's still some time. The negotiation concept that we keep hearing out of the White House that 50, 70, 20 countries, whatever the number, have come to the table to negotiate, I think it's complete BS. Because there's no way 70 countries are calling the president and he would go away golfing for 3 days at a golf tournament in Florida. That seems absolutely insane. And then claim to have won the tournament? Anyway, whatever. You can't trust a word out of the man's mouth. So we are back to the markets. So what do we do in the markets? Where are the markets today? Well, if we take a look at the markets and the futures, you can see that we're in the red again, not surprising. Not nearly as bad as I thought we were going to be. The NASDAQ was actually up earlier this morning. It's now dipped into the red. The S&P is down 0.5%, 27 points. I thought it would be down more this morning. I do think it's going to get below 4,800. I think that's the number to watch for. And but right now at 49.92, it's still definitely on the very low side. I believe the NASDAQ has gone into the green now. It's just not updating. And then the Dow is down, but it is coming back a little bit as well. These numbers seem to be delayed from what I'm seeing on my other terminal here. Anyway, if we get out of Bloomberg and we take a look at Yahoo, let's see what they say. We'll see that the crude oil is down at 57. So I didn't even touch upon crude oil. So all of the oil folks down in primarily Texas, but throughout the United States that supported Trump are infuriated at this point because this whole concept that he was promoting of drill baby drill was, again, complete BS. He's driven the price of oil down to the point where oil companies can't refine it to make any money at this point. When it's under $60, it's pretty much an unprofitable industry. So and it continues to fall and get lower. So this will be another issue coming up, and this is going to create incredible dissent amongst some of his supporters, particularly those in the oil business, and those are spread out throughout the U.S., but I mean, the Permian Basin and in Texas, clearly a big area, but also Arkansas and a number of other states that are quite dependent on oil. Then we scroll across further, you can see, the NASDAQ futures are coming back. The VIX is up to 50. So we called this yesterday, saying the VIX would get up to the high 48s, if not into the low 50s, based upon the U.S. implementing these additional absurd 50% tariffs on China. If we scroll through the list, the one that is still remaining stable, which blows my mind, is Costco. Being that it's so dependent on Chinese products, I would have thought this would have fallen more by now. Like Lulu, I mean, Lulu is basically dropped in half. Dollar General is off. Walmart is down. Pretty much all the retail are in the tank. Healthcare has held its own based on announcements this week that the U.S. government was allocating more funding to healthcare. And then we've got our utilities and energy stocks. So the utilities haven't fared super poorly. Vistra has been hit hard. It was up at 130. It's down at 100. But Con Ed is kind of holding its own. It's been as high as 112, maybe 114 recently, but now coming back down into the 106 range. The oil producers have been hit extremely hard. Had a bad day yesterday. It's looking like another bad day today. I mean, if crude's down $2.40 a barrel for crude futures, it's going to be hard to see any optimism in that sector today. So I'd expect that to be mostly red. We do see some green on the screen, though, in technology. One of the ones that if I held, which I don't, is Apple. I would be selling Apple at this point. I think Apple has the most exposure out of the Mag 7 to China based on where it does its production. And even with its ass kissing or ring kissing at the inauguration ceremony in Washington for Donald Trump, and Tim Cook saying he'd spend or allocate $500 billion to the U.S. going forward, it has done nothing to protect them and allow for their product to be not included or excluded from the tariffs that have been implemented. So, I mean, if you want to buy a $3,000 iPhone compared to a $1,000 iPhone in the US, because it's made in the US, great. But most consumers don't have the luxury of a $3,000 iPhone. We scroll down further. The other thing that's going on in tech right now that is relatively unseen but should be talked about, and I talked about this in a video about a month ago, was there was a trade going on at a lot of different, call them investment funds, maybe hedge funds, investment banks. They were using a concept where they would borrow money in Japan. Japan had negative interest rates, so they're actually getting paid to borrow money in Japan. Not a lot, but they weren't paying interest, or they were paying very little interest if they were paying any. And then they were using that money to invest in AI companies in the North American stock market. And when the AI companies were going up, it was an extremely profitable trade. But that trade has unwound for two reasons. A, the AI stocks have all plummeted, and part of that is because the interest rates in Japan started to increase, and so the spread declined, and now there was some selling that had to occur to recoup the money to pay off those loans and the borrowing from Japan. So as the AI stocks started to fall, they were probably bought as well in a lot of cases on margin, and some of them bought at higher prices than others. So as the funds started to see the decline of that stock and the decline of their holding, they had to liquidate, and that liquidation on a large scale drove prices down, and it was kind of a self-fulfilling prophecy. So I think most of that trade is probably unwound by now based upon the prices of the semiconductors and the AI stocks. But that was a trade that has really pushed the NASDAQ down further than I think it should have gone. And I think we'll see a faster bounce back from the NASDAQ when we start to see a bounce back in general. And I'm not saying we're anywhere close to that right now. We'll have to see what earnings come out with. And I think it'll be very company specific. But I also think after Delta Airlines came out this morning and said they're not going to release or provide a future forecast, I think we're going to hear that from a lot of companies this quarter. No future forecast, no future guidance. We don't know. There's too much uncertainty. I think that's going to be the message. And that may actually be beneficial for us here, because now they'll just have to try to beat on earnings and revenue. Okay, Walmart has just come in and reaffirmed first quarter sales forecast range of up to 3 to 4%. So again, if we look backwards before the tariffs took effect, I think we're going to have some pretty good numbers this quarter that will meet expectations in many cases. But we're not going to have the future guidance. So that might be enough come Friday when we hear from JP Morgan, Morgan Stanley, and then Monday with Goldman and other big financials. I think we might actually be in for a bit of a bounce on Friday and Monday in an upward trajectory. But still too early to tell. And if the president gets out on his Truth Social and starts making ridiculous statements, or really just statements because most of them are ridiculous, that could cause volatility and cause the markets to go sideways. There's definitely long-term a ton of buying opportunity here. But if you're thinking long-term, this is a dollar cost averaging time to get into the market. This is where, let's just use a round number. If you have $100,000 to invest, then divide it by 10 and invest in $10,000 chunks. That way, you're not exposing the whole amount, but you're buying in over 10 months. And over 10 months, will probably have seen a bottom. I think if you put 10 grand in now, that 10 grand's probably going to be worth 2 or 3 in a couple of months. But the 10 that you put in a couple of months will probably be worth 20 or 30 a couple of months after that. So that would be how I would invest a large chunk of money right now if you wanted to invest it in the market and you had a long time horizon. I'm not suggesting you do that. I'm sticking to the strategy of on red days, which it looks like it is today, looking at potentially buying some call options on indexes, and then on green days, buying some, like yesterday at the beginning of the day, buying put options on indexes. That's been an incredibly profitable strategy that has required less capital and led to significant percentage gains. That would be the strategy I'd move forward with. Financials, again, getting hit. These being the first out of the gate this week, this would be maybe where I would look to a banking index or even maybe an individual name here and there within this sector, this group, to look at a call option for a week Friday, thinking that you might get some good numbers out of these. That's where we are today on April 9th. Good luck in your trades. And if you like these videos, please hit the like and subscribe button.